Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Well, we made it through Wednesday. It was the worst day of the year to date, down 3%, but we're back with you today. So we're going to try to talk you through what happened yesterday, what's happened overnight, and what it means for this morning. The bajillion headlines, a lot of volatility, and we have our resident, I guess we can call her our resident market therapist on with us at 8:15, Anne-Marie Baiynd. She is a trader, an author, and runs the tradingbook.com. She will join us at 8:15 here. She talked us off the ledge in the fourth quarter, so hopefully she can talk us off the ledge today. So between that, between the volatility, between the earnings, a lot to get to on our show. Joel, what's the word here overnight?
Oh boy, well, I'll just quote it as I see it here. S&P's up 30 handles at 29.70 and change. Can't even quote it, it's moving so fast. Crude in the red here, down 32 cents at 54.90. Crude in the red, gold in the red, and silver in the red. So a little bit out of the flight to quality. TLT still up $1.16 at 146.85. And did Bitcoin get shellacked here? No flight to quality there. Right back at 10,160. Before we bring Triple D and JV Spec, I know the answer to this question. Spencer, what does the Benzinga mean? How did Benzinga get its name? Do you know that?
I've heard multiple versions of this story, but the one that I think is closest to the truth is it is a made-up word that our founder and his grandpa used to say to each other, I think.
I think it was a game. Wasn't it a made-up game?
Maybe.
To play with coins? Okay. Jason's not in the office today because Benzinga is putting on a cannabis conference here. So if you're in the area at the Book Cadillac, let's call it the Westin Hotel, over 500 entrepreneurs, investors, and people interested in the cannabis market right down the street from us. So, but we will get the official story. We'll get him back in the office tomorrow. Triple D, if you can talk, we'll talk to you.
I don't know if you can talk, honestly.
That's fine. So let's just move things along. S&P's just hit 2871.75. That's your daily pivot. So there's a number. There's a nice target. Wish I would have had an order out there. On the downside, everyone's looking for a reason for the bounce this morning. And we've been going through, looking at things, and there really wasn't any. We're looking for any specific catalyst for the bounce this morning. The only thing that I can find, of course, you know me, and it's technical. And our 6-day low was 28.23.25. We also had another low at 28.20. Now, we did have that blip down to 2775.75. That was like a week ago Monday. But I kind of call that a fake low because it was off a tweet and it went down really quickly and rebounded there. So to me, it just hit support. And that support was at 28.20. The current low, 2817.75. We've already had a 50-point range. We've been averaging 60-point ranges, so should be interesting to see if we tack on another 10 points. Mid-range on the session comes in at 28.45. I'm sure there's a lot of shorts would like to see it back at 28.45, and I'm sure some people that haven't bought the dip so far would like to see it back at 28.45 for a possible buy the dip opportunity. So besides the market chaos here, we have 13 apps, we have earnings, we have Windows 10 bug, we have Pivotal being acquired, more problems for Boeing. Spencer, you're gonna lead the way here.
Well, I want to say, if you're looking for a reason why Dennis is is gonna join us later in the show. Which is, I mean, look at the VIX here. I just pulled up a daily chart on my screen of the VIX, and man, are we high? I mean, we haven't been this high on the VIX since the crazy fourth quarter that we had. So that explains in a nutshell why Dennis is sort of frazzled dazzled here this morning, and why I think a lot of people are. So Joel,
Wait, I just want to say one thing is
yeah,
like, everyone puts I never look at the VIX. And I don't even think, I don't know how much Dennis does. I don't need a VIX. I don't need a symbol, something to tell me when there's heightened volatility, right? It's a very tough instrument to trade, and the VIX, is in the markets, and you can tell it. So I mean, I know a lot of people like to use their indicators and trade off it and use complicated stuff, but it's just not something Dennis and I use. We just use the S&P futures and what's the actual stocks are doing. But let's go. Let's go. I think
all right.
the biggest news of let's go with GE. I think that's some big news.
You think that's the big news? Okay. So the big news with GE this morning, Joel says it's number one on his list, so that's where we'll go. But the forensic accountant who warned the SEC repeatedly and was ignored about Bernie Madoff, Harry Markopolos, he has issued another report regarding GE this morning and their financials, alleging that the financials of the company are worse than we all know about. GE has already come out and denied his claims, more or less. But if you're looking for the reason in GE, that is why Markopolos said that they will need to raise their insurance reserve by $18.5 billion in cash. So that there's your reason for the vol in GE, in addition to the vol seen in the rest of the market.
And you know what? I was a bad boy yesterday, and I was looking for some things to buy, and that filled the gap. Right? It came down from the cult buy, and I don't know what I was thinking, but I thought the S&Ps were going to stabilize a little bit, and I'm like, hey, maybe Mark will turn around, get a nice rally, get a Trump tweet, maybe take this puppy back up to 930, 940, and the market kept on selling off, and like near the end of the day, I'm like, I never make money going long this pig. And so I dumped it. And I am so happy that I was like, what am I doing buying the worst stock in the world on the worst day? And then this news comes out, GE trading down on 0.48 here at 855, 5%. I mean, is this getting back to, let me go back to, let's get the pre-market low. Shorts, I'm sure, are a little bit happy about this, bringing it in. Man, this stock has lost, what, 20% since its earnings report here? Not sure where you're going to find buyers. Your pre-market low comes in at 840. So if you're holding on for dear life here, see if you can hold on to that pre-market low at 840. On the monthly charts, man, not much. I don't see anything much down to 712. So that's a long ways to go. But right now, 840. And then if they really want to take this out to the woodshed, psychological level, like at $9. But 840 pre-market low in General Electric.
And Joel, you mentioned a Trump tweet. Would he come out and defend the market? He did, and it didn't seem to matter. So I thought that was super interesting, the way that it happened yesterday. The market just did not care what Trump had to say. Tell us, what were you doing yesterday? I mean, does yesterday change anything for you longer term?
I've been a little bit more cash, more, believe it or not, bonds, just for some dumb reason. I've been in those for a while. Still good percent cash. I'm not really buying or selling any. There's some stocks I would like to sell. Like I wish I sold some of the Cisco that I had yesterday, but I don't know. I guess where I would kind of really say we got another bigger leg down is if we crack 2,800 and we crack it for good. Even though that's basis the September SPOOs, we got to 1775 this morning. So maybe just holding on to a trading range here, maybe get the TLT to back off, but I've always been conservative. I'm not, I'm not out there cherry picking on this dip, trying to buy a lot of stocks. And there's really not really changing my asset allocation here. Wish I had more bonds, but that's a little bit after the fact. So
Does the individual performance of each sector does that matter to you on a day like yesterday? The energy sector let us down about 4%, nearly 4%. Utilities obviously were the best of breed yesterday, but energy let us down. We talked a lot about that. Technology, financials, consumer services all sort of let us down yesterday, leading the charge downward. Does that color
no,
anything
because
for you?
I'm not really in those sectors. So I mean, I'm not in energy. I don't even know. I mean, the only asset allocation I have to energy is through the broad-based indexes, which they're becoming a smaller and smaller part of. And my only bank holding, and I'm just so close to like dumping this, but it's just showing a lot of resilience, is Flagstar FBC, and been holding on to that for a long time. I'm looking at 33.50 on here, and I guess maybe that correlates to like the world's going into recession. We already know that the yield curve's inverted, rates are going like we're going into a full blown recession here. I don't know, probably within like 2 or 3 months, but somehow Detroit's kind of holding up here. And maybe the banking, it's a bank headquartered here in Troy, Michigan. So maybe there's a correlation there, but not a lot of exposure to the bank sector and also to the energy sector.
I don't know if or when a recession is coming. I guess it has to come eventually, but
A couple of weeks, isn't it? I think I'm just waiting for like to come into Benzinga one day and
yeah, well, that's what they would have you think. There is a significant lag time between when the 2-year and 10-year inverts and when an actual recession starts. On average, it takes like 12 months for the actual recession to start from the time of that inversion. So I don't know, man. I think maybe we can expect some vol. I mean, it doesn't help that we're in August here. It's typically the slowest month of the year, so there may be even less liquidity than normal. That's probably not helping things. But I guess I'm just anticipating continued volatility. I don't know if when an actual recession will come, whether it's the end of this year or next year or what. But based on what the Fed says, you would think it would be tomorrow. You're right, but I don't
All right,
actually.
Spinner's saying a recession is defined by 3 negative GDP quarters. Is it negative as in declining, or is
Yes,
it
yes,
below
it's
zero?
negative. It's negative growth. That's what he means.
Negative growth. Okay,
Yeah.
well, then we're both batten down the hatches. We're in all. I mean, when are we in a depression? Is it 4 negative?
Jump into conclusions. Holy, I'm just listening to you guys in the background talking recession, talking depression.
I'm trying to talk
Come
Joel off the
on.
ledge.
I'm
I'm
being
trying to talk Joel off
Come
the ledge.
on.
Dennis, I'm being.
We're 4% off the all-time highs. Let's put it in some perspective here. We're getting
Dennis,
a lot of chop, but I completely disagree with all of this.
He's kidding. He's kidding, but
I don't know
it's hard to tell.
It is. We know we're going into. It didn't sound like a joke. I mean, maybe you were trying to make a joke, but we're going into a recession. I don't know we're going into a recession. I don't know that at all. A week and a half ago, the S&Ps were at all-time highs.
Dennis, I was joking.
I completely disagree with jumping to those conclusions. Is there problems out there? Absolutely. Is the world in a lot worse place than the U.S.? Absolutely. Are we going to a recession in the U.S.? Still to be determined. Just because the media is pumping recession yesterday because we got an inverted yield curve doesn't mean it's imminent. Doesn't mean it's happening. Because it's happened before, it doesn't mean it has to happen again. I mean, we're just chopping all over the place. We don't know. And obviously, you've got bulls and bears. The bears are going to argue that point all day. The bulls are still going to argue that we've got a lot of strong technical stocks still on uptrends. I mean, there is weakness in the same couple sectors we've talked about, but I can't, I don't agree with in this, that a recession's imminent. And the media was really, you're getting it from, CNBC watching that yesterday for an hour even. I mean, they are just talking this inverted yield curve, and it's equal to recession every single time. So it's coming. I mean, that's what everybody was just pumping. The media loves to talk negative about everything, though. I mean, that's what sells is fear, right? So get a level head. Don't go start dumping all your stocks out of your portfolio. I think if you're panicking, you're saying I got to get out, this is it. I think it's probably a mistake again.
No, a couple of things. First off, you will never hear on this show the 800-point drop yesterday, 900-point drop, largest drop in history by points. You'll never hear that because that means nothing. Because of course you have the largest point drop when you're at all-time highs.
Yeah, you had 25,000 or 26,000 Dow.
Right.
I mean, 1,000-point drop when we were at 10,000 Dow was a big deal. 1,000-point drop at 25,000 is only 30% of the big deal. So.
Yeah.
I mean, we don't know. The bottom line is nobody knows. And I had a couple texts yesterday. Where do you think the S&Ps are going the next 3 months? I am having trouble telling you where they're going the next 3 minutes because it's so crazy and so choppy. So to come in here with any technical, aspect, have your levels, have your stocks, have your list. If you're underinvested, use that opportunity to buy the stocks you want. But just coming in here and saying we're going to recession, we better liquidate and go to cash and buy, and if you're buying bonds here, you are so late to the party. I mean, this TLT is up here again this morning. It's probably, the market's shrugging it off to a certain extent, but Dennis,
please.
Bottom line is don't panic.
Okay, so
wait, be quiet for Spencer. You couldn't tell that I was being extremely sarcastic and facetious.
Not at all. It sounded serious.
No. I think we did a bad job.
It really sounded serious, Joel.
I think
I jumped in. I was like, are you serious?
What?
I mean, this is the problem with radio, right? You're not seeing, sometimes it's just, you don't catch tone and if you were, being, sarcastic with we're going into a recession. I mean, I did not catch that at all. It sounded dead serious.
All right. So apologies. We did a bad job of conveying our sarcasm there.
It did not sound sarcastic.
Okay. Everyone in the chat knew I was joking around. I guess you two guys that work with me the most cannot catch my sarcasm.
All right. Well, let's find out who.
Did not sound like a joke.
Yeah. Let's find out if Anne-Marie understood our sarcasm or not. We'll bring her on right now. Anne-Marie Baiynd, as I mentioned, she's our resident market therapist. She's a trader. She's an author. She runs the tradingbook.com. Anne-Marie Baiynd, are you with us? Good morning.
Can you hear me?
We can. Good morning. How are you?
I'm doing well. I was laughing because he ratcheted Dennis up. Woo, just spun him right up.
I was trading. I wasn't even supposed to come on till a little bit there, Anne-Marie, and he got me out of it. And I was like, I can't take it anymore. I got to jump in here. I heard this recession talk on CNBC yesterday a dozen times at least. A dozen times. Every time the yield curve has inverted, a recession has followed. I've heard this so much yesterday that I was just sick of hearing. And then Joel brought it up, and obviously it's the media just pummeling crap into our head all the time. I mean, I don't care if the yield curves invert. Does that absolutely mean we're going to recession? I disagree with that. It doesn't mean anything. It has happened before. It could happen again. I mean, it's on the table, but I don't think it's imminent at all. What are your thoughts here, Anne-Marie?
Yeah, well, first of all, Anne-Marie, did you think that I was being sarcastic?
I don't think you were, because the media was not sarcastic when they were saying this yesterday. CNBC, there was zero sarcasm. They were all saying, it wasn't even sarcastic. They were saying this is imminent, that we're going into a recession. I heard it yesterday. Anybody watching CNBC yesterday, I heard it a dozen times. So why would I think you're sarcastic when I just heard it a dozen times in the media?
Dennis needs a cup of herbal tea.
There's no sarcasm in that.
I was sarcastic.
I think he's just backing up. I don't think he was even being sarcastic. Anyways,
I didn't hear sarcasm, but I'm really not good at catching sarcasm. It's just not one of
me neither, apparently.
That I'm not good at it. It's just not my thing. But I could tell that you were regurgitating a line. I just couldn't. I mean, I knew you were saying, oh, and this is what's happening, like everybody's saying that. But really, it does have a lot of traders on edge. Now, 2 days ago, what I noticed was when we were falling, just fading, a lot of big performers were selling off in bigger amounts, like Disney and all the high flyers were down more than 2%. And we were just sort of, the broad indices were only down 0.6 or something like that. So I tweeted that out and went, people are covering. They're taking risk off the table. And of course, we know August and September are those riskier months that we have to watch out for. Everybody's talking about spiking volatility and all of those things. The big thing is to stay calm and carry on, because when did staring at the television or listening to that sort of stuff do our portfolios any good? Right? We have to step back and go, wait, what are we seeing? Yes, we're still holding June's lows. And so we're not far off the game. We do have some things that are warning shots across the bow, but our job is risk management anyway. And so we should have been looking at that 2 weeks ago when we saw, hey, wait, that doesn't really look right. We didn't hold the close of last week. We can't get up and over the edge of the open of last week. Something's amiss. We have to see that that price pressure is telling us that traders are rebalancing that space. So that basically, if I could cue up the little birds chirping in the background, like I normally have floating around here, that's really where we are. And if we're late to that party saying, well, wait a second, we had a little bit of a warning shot maybe a week ago that said we got to watch out. Now we're sitting at this space, and we really are sitting at very key support areas in the broad indices, and now they're bouncing. This morning, I don't know, some tweet sent it right off the lows, but the fact of the matter is, if you look back, you can see that 28.24, you can see that 74.50 area in the NASDAQ or the NQ. And those are just saying, hey, the value buyers are taking a look at things. It's why I look at these weekly charts to tell me what in the world is going on. And that's what we're seeing. So we'll see if they can hold this zone. We know that everybody's trying to sell up at any of the bounces. And so that's basically the cautionary event for me. Am I looking for brand new lows to engage? Potentially, but I mean, we're still in a very bullish market. So I'm going to look for my best performers and see where they've taken a hit. Have they come down into that weekly support? Are they looking at monthly support? And I'm going to see if we can close the week around here. And next week, I'll be up for battle again if those edges hold. If they don't, it's telling us the same story that it did a week ago. Wait a second. People are coming into these areas. They're seeing the support. It's not holding. And we've got another leg down. And that's really, one step in front of the other. We're looking for those rocks that we can step on across the river.
Anne-Marie, help me out a little bit too, and we've discussed this before off air, incorporating the overnight levels and whatnot. And that day, I think it was last Monday night when we swooned down to 2775.75. I mean, I kind of it's there. It was on the chart. It traded there, but to me, it was just it was like a fake low. And so what I tried to focus on this week was instead that low that we made on Thursday at 23.25, which turned out, 6 points in this market is not much. So to me, I'm kind of torn here. I mean, my line in the sand, I thought, would be that low from last Monday, but we kind of had those other lows. So I guess this 28.20 level now, the fact that you had the big bounce off it today, to me, how do you just kind of because to be there, you would have, I think Dennis was trading. How do you take those, wow, or do you just take your information off the intraday charts?
Okay, so here's the question. The question is, where we see a bounce, does it actually have to be the stop? And so when you talk about a number like 2778, which is, did you say 2878 or 2778?
2775.75.
Okay, so when you take a look at a number like that, and then all of a sudden you see this 2820, your thought might be, well, gosh, that's another 40 points away. How can that end up being my particular support edge? And indeed, we may end up heading into that space, but here's the big thing. The big thing is, How does broad congestion look? Yes, I have a wick that says people went down and went hunting for this deep stop, but I have a broad area of congestion. I can see a ton of candlesticks really representing lots and lots of traders arguing around that area. That's the zone I looked for.
Okay.
If that argue point doesn't hold, then I go, all right. But once I see that argue point holding, I'll telescope right down into something like the 1600 tick, and I'll look for buyers just packing right in. I'll look at time and sales, and I'll see the big numbers coming off 10, 20, 30, 50, 100, and I'll go, there they are. And I'll step in from that perspective. But that really is how I look at it. If I look at it like, wow, the low is where my support is, I'm never going to be able to get in because I can't think about, all I can think about is a 40-point risk event. So I have to reassess that.
Yeah, I agree. And I think if anything in this market, when it gets like to these kind, I mean, you got to have areas. I mean, there's no, I mean,
Exactly.
I mean, if you like a stock, you know, in a certain area, I mean, you know, and I'm not talking about averaging into losing positions or anything like that, but I mean, the chances are that you're gonna, you know, to get the thing on the exact tick or the cleanup print or something, you just gotta give yourself zones. What I found out that was working pretty well yesterday in the S&P in the E-minis was you know, when I was trying to short it on the pops, I didn't really try and short it what I thought was like the high of, you know, the move, because you never know. I mean, the levels just come and go. But what I was finding out is when I had stops below that, you know, if let's say if it got up to 58 and if I wanted to get short at 54, I would automatically get that execution at 54. But if I didn't have the stop in there and I didn't get executed, then you're just like a deer in headlights. It goes down to 51.50,
Exactly.
175. But if you use the stop to catch it, and of course you can get whipsawed, you can get caught in things, but if your stop gets executed, then you say, okay, I'm in here. This was the area, you know, I'm leaning on.
Mm-hmm.
And then also for getting out of the trades, it's hard to pick the bottom. And you always feel bad when, you know, you cover at 28.40, goes to 28.30. So as the market's coming down, I just keep lowering my stop down. And then that way I get taken out on the momentum to the upside, as opposed to like, okay, this is my number, 28.30. I'm buying it here no matter what.
Exactly. We simply cannot do it. Volatility is it's too big in the space right now. But here's something very interesting. We've got the 15-minute SPY up. And what's super interesting to note, you know that big thing people say, the bigger the base, the higher the space? Because the market is fractal, we can see this in tiny measures, and you can see this balancing environment where the 15-minute chart is essentially telling us what's going to happen, right? We see this sideways action that runs on the area between the end of the 12th and into the 13th, and then all of a sudden it breaks out of the space and runs higher, and then sits in that space and then fades lower. All of these things we can absolutely use and trust, and that falls all the way back. You know, I say it all the time, but I really am a caveman in this business. It is what is support, what is resistance. Is support broken? Has it retested and failed? Okay, I'm in. And that essentially keeps me on the right side of the trade most of the time. And when we take a look at these, like particularly between the 13th and how it starts looking on the 14th, we've just broken down from a big channel event. Then the channel event from the 13th gets us involved at the next break, and we can just really follow it down. We try to make things very complicated when really it should be simple. Like, hey, if a lot of people are in here, it's going to continue to go up. And if a lot of people aren't, it's not. And so I mean, listen, sometimes that keeps me out of some really fun trades, but most of the time it just keeps me safe.
And also along those lines, like you see these big moves in the market. You swear, I mean, I'm not a big candlestick guy, but the wicks and this, that. But sometimes you could get more out of a consolidation period. Like in a lot of times, like in the market has a big decline in the expanded range. I'm like, well, let's calm down. Let's get that range back to 25, 30 handles. And a lot of people, they'll be like, oh no, there's another big move coming. There's another big move coming. And what there is there's actually consolidation periods. And I think that that's one thing that you really have to pay attention to is, not the spiky highs and lows and stuff, but when the bulls and bears agree and they settle in and it winds.
That's exactly right. And we have a statistic. I don't know how real it is. I'll regurgitate it, but it says something like the market's really only trending 30% of the time. And so 70% of the time it's going to be locked in these consolidation events, and the rest of everywhere is where we end up getting our moves. But I mean, that's really, even on the intraday space, we can look at those edges and go, okay, I'm consolidating here. If it fails, I'm going to watch for a failed retest, because I know people are going to try to recover those edges, because many of our mindsets are terminally bullish. Some of us are terminally bearish, but whichever the case, we're very rarely evenly based. And so these sideways areas of consolidation freak our minds out, because we either want to be bearish or bullish. We can't sit in a wait state and just allow the market to tell us what's going to happen.
All right, let's see. S&P's up 1575 at 2856.50, bouncing around pretty good here. I'm just going to give you, I'm going to just give you rough areas of importance for me today. And for me, mid-range on the session right now is 44.75. And I'm going to give a zone down to the close because I put a lot of emphasis on the close. So I'm going to say that whole area, 28.40 to 28.45. That's my area. That's an area of support that I want to see hold. We'll try attempt on the long side first time we're at that area. That will be the area we need to bounce to get back to challenge that pre-market high at 28.71.75. Any particular areas of importance? If you don't have anything in the S&Ps, do you have something in crude or gold that you would like to keep an eye on?
Well, what's bothering me about gold is that it feels it's got so much negative divergence sitting on it. I'm very bullish gold. I've been bullish gold since, I don't know, last year. Just really bullish on gold. And it is now in a space where, listen, I can certainly see 1800. I can see 1574. But there is so much technical divergence that it's like what Dennis said earlier in the day. If you're going long the bonds, you're really late to the party. Not that it can't go up further, but how much further and with what risk becomes the big question. And so I'm looking to be very, very cautious about any kind of adding in those positions, and watching for a very deep pullback, particularly in gold, where I can reinitiate another long, because I do think the currency space, it's going to create a flight to gold everywhere since everybody's devaluing their currencies. I think that that's going to have some natural upshot.
Anne-Marie Baiynd is a trader and author. She runs thetradingbook.com. Anne-Marie, as always, thanks for your time and have a good rest of the week.
Thank you so much.
All right, 8:35 here. We did have some data out at 8:30 in the midst of that conversation. I guess the consumer is strong. Retail sales for the month, for July, beat estimates 0.7% versus 0.3%. Non-farm productivity beat. The Philly Fed manufacturing index beat. New York Fed manufacturing index beat. So the consumer is strong. What recession? No recession here.
All right. I'm sure Dennis is back at it again. So
I'm listening. I'm just kind of trying to work out of a bazillion things and getting chopped up. It's so choppy. I mean, we're moving 7, 8 handles like we're moving 1 handle normally. That's how it's moving right now. It's the equivalent of moving 5, 6, 7 handles, and then normally we're moving about 1 in that same amount. So I mean, we're moving 5, 6, 7 times what we're normally moving. I know the VIX says we're at like 21 or whatever, or 22, but I'll tell you, it's a lot more choppy in this pre-market.
Yeah, Dennis, is there ever a point where, I mean, are you scaling back the size a little bit, or
a little bit on the size, because you really, obviously the moves you're going to make are going to be 3, 4 times as big right now. So, you've got to manage your risk as much as you can. But for the most part, I'm just doing the ARB as much as I can. The only problem is during this time period, like right now, it's so choppy that you can't, like normally I can work 10, 12, 15 orders. I was just talking to my buddy up Bright. I'm like, it's like you got to work 1 order right now, 1, 2, because if you leave an order out there, you're picked off. So like if I'm like, okay, I'd be willing to sell Apple up here, at 203.50, all of a sudden S&P rips 7 points. Well, that 203.50 sale is no good now because it should be a 204 for the adjustment, and it's so fast. So you're getting picked off by high frequency traders all over the place. So you really, can't forget an order out there right now. So you got to work like 1 order. You're working something, you see a bid, maybe you hit a bid. But if you're just sitting orders out there, you're a sitting duck here right now because you're getting picked off left, right, and center. I mean, if you want your price and you get your price, you're happy to get your price. But, my whole strategies revolve around where it is relative to the index. The index is popping, 10 points here in a matter of 10 seconds. That means all of my offers are going to get picked off. So you've got to really, focus, and you've obviously got to be a lot faster, and you can't have 10, 20, 30 orders floating out there because you're going to get picked off unless you're full automated. But even at that, I wonder how, much the automation, gets picked off here in this markets too, because you still got to get those orders out. And there's always, traders are going to be faster than you, even with automation.
Is your Virtue going to be a buy here, Dennis? I mean, after this kind of volatility, I mean,
I still own it. I think so. The wild card, and the wild card for all of us listening here right now, is Bernie Sanders. I mean, if he gets in, he wants to put all traders out of business with his transaction tax. We haven't talked about this. I mean, what does that mean for Virtue Financial? I mean, he has a shot. There's no doubt that Bernie, he's picking up some steam and he has a shot. So, I mean, that's a main thing in the platform was tax Wall Street to help Main Street. And he's floated out this idea of this transaction tax. So basically on every stock transaction, I forget the number he proposed, but even if it's like a fraction of a percent, imagine, all of a sudden you've got $10,000, a $10,000 position, and you say, okay, well, it's going to be 0.5%. Well, that's $50 in, $50 out on that $10,000. I mean, who's going to make money? You're all of a sudden taking, this $5.95 or free trading and blowing it all up, because it would go, you're going back to the 80s when we paid 1% commissions to our brokers to get in and out of trades. That's in his proposals, guys. So if you guys are voting for Bernie, just know if you're a trader, he is trying to put you out of business. That is in, if he becomes president, there's a good chance that he might be able to push through something like that. I mean, it would be fought, and it would be terrible for the markets. Liquidity would dry up. So it's not just bad for traders, it's bad for Main Street too. But academics and economists have floated this idea for years. They don't understand it. They don't understand what liquidity means for the market. You don't get 1 cent spreads when you put a 0.5% transaction tax on it. You get 0.5% spreads at minimum because these market makers have to make money. You could put market maker exemptions out there. Well, that doesn't punish Wall Street at all if you do that. It just punishes Main Street altogether. So just be careful with who you're voting for, because I'm telling you, Bernie Sanders is trying to put us out of business. I like a lot of stuff that he's doing. I like a lot of stuff what he means, but he's dead wrong on this transaction tax. I'm not just speaking out of my own, personal benefit here. I'm speaking for Main Street too, because you're going to see liquidity dry right up if we get a transaction tax in.
All right, looking at my my up and down filters this morning to see what is actually up here. The biggest gainer, Pivotal Software. If you bought the dip after their June earnings, congratulations. You've got some money back here this morning. And not a confirmation, but a report that they are being acquired by VMware for $15 a share in cash. The company has confirmed discussions, but not confirmed the actual takeover.
I'm short VMware and Dell on this because I think they're just overpaying, and so I'm just going to leave my comments there.
Yeah.
because I don't want to comment on that. But obviously, they've been punishing the acquirers in these deals. So I shorted VMware on that headline, and I actually went around, and Dell owns a huge chunk of it, so I shorted that on the headline as well. So I'm sticking with those positions. I will. These are overnight trades, so I'm going to get out of these today, but I'll limit my comments there.
Well, I will say no one saw this coming in pivotal. There was no memo going around after the 2-for-1 stock split. It's up $6, 14.30. So if you figure in, the cost to carry and, the probability of this not going through, it kind of looks like it's going through here. Haven't quite got up to that $15 level. Just hanging here at 14.30. So if you want the rest of the meat on the bone here is 70 cents. I don't know if anybody else is coming in to do this deal as well or at a higher price. You're risking 70 cents or trying to make 70 cents with a potential of this deal falling apart, and then they would be back at the $8 area. So that's what I'm just like, really no big deal. I don't even know the sympathy plays with Pivotal. I don't know if
there is any.
Yeah, I don't know.
I mean, it came out of the blue. They're paying a huge premium here. So, and I misspoke here because I'm actually long VMware, short Dell. So I put on the spread here in a very weird ratio here, way heavier the Dell because it only owns a chunk. But I was short VMware off the headline, and I covered it last night, and then I turned around and I thought Dell was a better value, and I shorted Dell against it. But that's just doing the arbitrage between those two because Dell owns a huge chunk of VMware.
Let's get to some earnings here. We had Walmart this morning, and I guess the consumer is strong, folks. The Walmart Q2 adjusted EPS, they beat on that number, $1.27 versus $1.22. Sales, a slight beat at 130.4 versus $130.2 billion. Comms for the quarter overall up 7.3%. U.S. e-commerce sales up 37%. That is in line with the prior quarter's year-over-year growth. Sam's Club sales up 1%. They raised their full year EPS guidance as well from in the low single digit range to the mid to high single digit range on a year over year basis. So good all around from Walmart this morning.
I mean, in this tape, you're going to rally $6-7 and get back near those highs. If I was long this, I'd ring the register, and I think it's a gift.
Yeah. Also, anybody that I'm not sure, the option premiums were probably a little bit more jacked up because of the volatility. So anybody scooping up the 106, 107s, 108s, 109s, 110s, I'm not sure how high the 113s were. You could be locking in some profit here. Pre-market high, nice whole number there, 113.40. Hit 114 high. Coincidentally, the all-time high is 115.49. So if you want to hold out for another $1.50 on that, a little bit of follow through, that could be another target. The other thing I like to, when I mention these all-time levels, I really like to look at like the all-time closing high, and that, just that's where people say, the best mark they ever had. And that was 114.98. And then I also see 5 consecutive closes right at the 114 and that. Let's call it 114.60 to 70 area. So if you're looking for follow through that pre-market high, I'd say 114.60 and then the all-time high of 115.49. But Dennis, is there any of up? How much stock is it traded here? Is there any kind of chance where there's enough in the book to hold it?
No, I don't think so, because so this is the way when you're seeing stuff in the book, it's usually at levels that it hasn't been to before. There's GTCs on the book.
Yep.
I mean, those GTCs all got executed over the course because the stock's been moving down through this level, so it's going back up through that. So the book will be pretty clear in that regard. I mean, there'll be shorter term traders, but you kind of cleared it out over the last couple of weeks there. So 566,000 shares, I don't think it holds it down. I mean, it wants to price up here. It's reporting on the right day. You're getting a little bounce in the overall market here, so there's a little bit of hope. Maybe Walmart's giving you that hope. But I just look at this and say, yeah, it's a big pop. It's getting back near its all-time highs in a tape that everybody's scared of. And I think you get anywhere near 115. I think there's sellers all over the place. So I think the risk reward here is maybe it gets to 115, so $1.50 up. And I don't think it's going to leak it. I think it can hold on to it. It's kind of defensive too. You got to consider that for Walmart. It always plays a little bit of defense. When the market does bad, Walmart can actually hold up, just like Kroger, just like a lot of the other stocks too. They play a little more defensive style to them, but I still think maybe it blows out. Maybe I'm wrong. I mean, this market's so hard to call. It's so finicky. But I think if I was in this, I'd be ringing the register.
All right, reporting on a bad day, the Cisco kid here, Spencer, down 371. Why don't you give us that?
Q4 EPS 83 cents, beat by a penny. Sales beat by a hair as well at $13.4 billion. They did give some Q1 EPS guidance. That was a hair light, and their sales growth is going to be flat to up 2% on a year-over-year basis. So nothing too great from that. Nothing horrible, but nothing too great either.
I own it, long-term portfolio. Obviously, it was a mistake, just like a lot of everything else in my long-term portfolio. It's been a mistake as of late. Definitely not had a lot of luck in my long-term portfolio. The trading's awesome, but the long-term portfolio is getting hit here again. I bought Cisco. I knew I was taking it through a report. I didn't think they were going to miss like that. I didn't think it was going to be down 7%. So I'm sticking with it. I bought it, stuck it in there, the long-term retirement account. Hopefully it comes back eventually, but it doesn't, I don't think I'd be just jumping in here. Is there any reason to jump in and say, okay, this is the lows? I don't know. I mean, this is the market where the fading the moves is working, but it's a tough investing environment, really tough investing environment right now.
I got a little smidget of this one too, but I got a little better lead on it. So I'm still, I think I bought it back sometime in 2018. So I don't know. It's coming back. I mean, yeah. Well, should I show that at 56, 57, 50, in that area? No, but I still got it going my way a little bit here. So hopefully get a rebound over the next 50 days. I really didn't look at this. This thing went from 57 to 50 in a heartbeat. So street leaning the right way into this report. I kind of think we're lower, and I was watching this thing trade down last night, and I wondered if you were nibbling on it at all, Dennis. It got down all the way. Let me go to my data window here. It got all the way down to, it was in a 45 handle. It got down to 45.31. And so I think you've seen.
This isn't the type of tape to go and, okay, I'm going to fade this bad earnings report in. It just hasn't been working. Even before we started rolling over in the overall market, it really hasn't. It's paid on the overshoots. Like when a stock is, going straight up and, you have an order out there and it just bounces immediately. But the tape yesterday, when you're down 800 Dow points, it was going to take, I almost should have sold just ahead of the print, because when you're down 800 and the sentiment is so terrible, and you're down even a little bit after hours, the sentiment is so terrible out there that they were going to have to blow it away for that to go higher. And was it a bad report? Yeah, but they reported on the absolute worst day. I mean, we're down 800 Dow points. They wanted to sell everything. So, maybe you can argue that Agilent didn't do that. Agilent went higher. But, I mean, it was a tough tape to report into.
Okay. All right. Since you made, and I'm just talking like just today. I'm not talking like overall trying to stick it in your investment portfolio. I just see a stock like Cisco makes a low at 45.31. You're $1.70 off that. I'm just thinking if you come back into a decline, I don't think you see that pre-market low.
Yeah, I think it's there's always overshoot, so I think it's
just a little bit overshoot. So okay, so we had a good report, we had a bad report. Spencer, you want to give us, what about Alibaba?
Yeah, I was just going there actually. They were this morning, Q1 adjusted EPS, $1.83 versus $1.46. Sales also beat 16.7 versus $15.8 billion. So very nice, very strong beats for Baba on their EPS and their sales in the first quarter.
Pour it on the right day because we're up here this morning. This market is so crazy. Anyways, Alibaba has just been chopping around. Really, let's put her, just put in perspective. And Anne-Marie, is nice. She can calm down and give us some perspective on everything and calm us down. But I mean, you look at here, we just keep getting chopping around on all these stocks. I mean, is there any trend in Baba? Is there really any trend in Walmart? Is there any really trend in the S&P SPY? Not really. It's just all chopping here. So it's hard to say, okay, where are we going, on this tomorrow? Who knows? Depends on what the next headline is with China. So it's a nice relief pop. There's a lot of people caught long this thing. I think you're fading. I think the fade trade is in with all moves. If you hold long enough, it seems like they come back in. So I think if I was, and I am long, Bob, in the long-term portfolio, and I'm not selling that because that's in the long-term account. But if I was in it for a day trade or a swing trade here, overnight trade, I'd ring the register because you're going to run over at supply again. Could it go 175 and go 180? It can go anywhere. But it seems like we just keep getting chopped up, and it seems like if you're chasing stocks, you always get a better chance. So if you jump in here and saying, I got to buy Baba now is the time, it was a good report, you probably get a better chance tomorrow or the next day where some bad headline comes out or China fights back and we're all of a sudden down 10 points on Alibaba. It's all just linked to the trade war with China right now, Alibaba.
Good report. A parameter on the upside, 168.96. So you've already backed off a buck from that pre-market high. So that's what you want. You want to see this thing get over 169, get to 170, go 171, go 172. Longer it takes to get up and take out that pre-market high, the more I would be leaning on that if it did take a short position as a potential stop out point. But it is, as we speak right now, it's holding a bid here, Dennis, up 569. So it is a buck off the high. Doesn't look like it's ready to crater yet, but we got to wait until the true liquidity comes in at 9:30. Any imbalance on this one? Buy imbalance? Sell imbalance?
Yeah, let's go take a look. 49,000 to buy.
Yes.
Projected price. You know, New York Stock Exchange adjusted on Monday. They've adjusted the imbalance feed and they adjusted the projected opening, which is called in my feed continuous book price. And they give you a projected opening as early as when these imbalances come out at 8:30 now. So the projected opening on Alibaba right now is 166.50. They used to only do those projected openings at 9:28. So it looks like I didn't even know they were supposed to do that. I didn't see a filing that was coming, but I've got projected openings for all these stocks right now. These change as another order comes in. That's going to always be changed. It's a moving target. But at 9:28, they didn't used to come out with the projections. Now it looks like they're starting them at 8:30. So right now, the projected opening in Alibaba is 166.50. If it was to open right now, it would open at 166.50. But that's obviously is going to be.
How they been? I mean, it's a moving target, right? So
it moves continuously. It's adjusting automatically. So, give me any New York stock. I can tell you where the projected opening is. I mean, there's, some that are crazy.
How about Procter and Gamble?
Procter and Gamble. Okay, well that one's 0 for some reason. So the
I love for that to open.
He hasn't turned on the switch for that one yet, apparently.
GE's rallying back here a little bit off that report, down 27 cents, down 22 cents now. So GE's rallying. But you know what, Dennis? You know why they have that? That's another data tool, right? It's more data that the stock exchange should sell to people.
Well, there's a point there too. I mean, that's where they make all their money now is in the data. So obviously they're going to try to improve it as much as they can so they can sell it.
Exactly. All right, there we go. Spencer, keep us going on the earnings parade.
Let's go to Canopy Growth here. We had Tilray yesterday morning and Canopy, or the day before, and Canopy Growth yesterday after the bell. Their loss is wide, and I'm kind of amazed that they only made 90 million Canadian dollars last quarter, but that's what happened. Their earnings per share, they lost $3.70 versus a 40-cent loss a year ago. Sales, like I mentioned, $90 million in Canadian versus 25 million the year prior. So their sales are going up while their losses are increasing in lockstep with that.
This disaster report here too, it's going to weigh on the entire pod sector today. We've been getting this right. I've been dogging the pod stocks here for the last month and they've been going straight down. Yes, we've had some rallies in there. The Afria one took me by surprise, but you look here and this is down 11%, making new lows on the move. Kronos had a good report. They faded that immediately. That was your sign that they just are not liking the sector here right now. It's going to be down in sympathy here. MJ, which is obviously your ETF, is going to make new lows on the move here at the open. Afria is trading down. ACB is trading down. They're all trading down. I mean, ACB had a nice pop a week ago. That got faded immediately too. Even the Afria pop has been faded. It's starting to leak too, and it had an awesome report. So they just don't like the sector is completely out of favor right now.
I just think the black market is just too big.
It is.
Yep.
It's not only that. It's just the competition. I mean, the licenses. I mean, people who are still believing in this long term, they're paying crazy valuations. Everybody's starting to grow pot, and especially in Canada, like when we had Alan Brockstein on. Originally, 2 years ago, it was 35 licenses. So all these companies that had a license had a big edge. And now Alan Brockstein was on our show and said there's over 200 licenses out there now. Where is it going to be 2 years from now? 1,000 licenses? Every farmer growing pot? I mean, it's the competition's coming. So those licenses are not worth nearly as much as they were before. So if you're going to pay 100 times earnings for something, have something that's somewhat protected. None of these are protected. They're growing marijuana. It's not rocket science here. It's, growing a plant and adding water. So I think when you're paying 100 times earnings,
it's a little harder than that.
well, let's be honest. You're going to pay 100 times earnings for these companies.
Oh my goodness.
Plants?
So, Seth has something to say. Seth,
Yeah,
what is
I
it?
think too many cannabis companies went public too fast. I think that's probably like
A little bit too, yeah, for sure.
Like
and there's going to be some that are best in breed, but even the best of breed, which Kramer's been saying is canopy growth forever, is making new lows on the move.
Yeah, because like you said, what else can you do besides grow pot and make pot?
I mean, this is my opinion, and I know we have the cannabis conference coming, and these are all great people. They're just, the valuations just got excessive. I'm not saying these are bad companies; these are good companies, but the valuations got to a ridiculous level.
I think we just went from not having any to having way too many, way too fast.
Yep. Yeah, I think the valuations have to come in.
It would be a lot better, like the way cannabis companies are working. But they did like all of them scaled up so fast and went public so fast because they want to get that investor money.
It was smart too. I mean, a lot of these guys made a lot of money. The management made a lot of money. The shareholders made a lot of money. Think about these moves that these stocks had. So if you were smart enough to get out on Afria, like look at the chart of that. That thing got up. I don't know why my chart isn't working, but it was up over $23 at one time. So I guess that was because it was in Canada, it wasn't listed over here. That's why I don't see it on the US side, but equivalent $23. I mean, these were, if you were early on this pot, you made a lot of money with these companies. I think the easy money has been made. Is there value somewhere? Yeah, all of these companies have value somewhere. But I think there's the separation is what we're seeing now is that maybe the growth is not going to be where some people had hoped it was going to be. And that's probably due to competition. So I think there's still more pain ahead. Sorry to say it.
All right, pre-market low, CGC, it hit it on just a little bit ago. Get the correct chart up here. You did spike down to 27.03. You're getting a little bit of a reprieve. You're back up in the 28 handle. I just went to my monthly here, and you had a big old bar in January this year, which you had a 26.30 low. I don't think you're going to see that today, but if you do take out the pre-market low, that's what I would be looking at. And just a similar situation that when I'm looking at this stock, similar like Macy's yesterday. Man, I was hoping for 1550. I told you I was going to close above 1550, Dennis. Then I got and it just 1582. So it's like, okay, I'm not the only person that could see 3 monthly lows at 1550. But that was a big, and it ended up rebounding off. I wish it would have got a little bit lower. But once again, talking about zones, even in a stock like Macy's, if you like 1550, you're not going to get that on the exact. You got to give. Maybe I should have started nibbling at 16 and been willing to go down to 1550. But when it charts like that, we like to try and wait. Let's just, Dennis, before you go, let's talk the banks a little bit.
Yeah, and the TLT, which is the driver. The TLT has been the driver for this market. The market has been inversely correlated with the TLT. And if you're wondering why the S&Ps are trading higher and the TLT is trading higher, you're going to call me a liar on that. It's because the TLT was way up this morning. The TLT has leaked almost all of its gains away here now. So that is why the banks are actually stronger, despite the TLT being slightly higher. Because where were we? How high did we get on the TLT this morning? It was like 147.5, wasn't it? So we're leaking big time. And that's why you're seeing the market turn. In my opinion, the market started turning when the TLT started rolling over.
Yeah, full disclosure, I did look at Bank of America yesterday at a really nice level at 26.40. So I got that, and I'm looking for a pop. I think the pin might be at somewhere around 27 this week. Monday's high 27.08 is just a short-term target on Bank of America. So
individual banks, just my thoughts here. Again, I think rallies to be sold. I think there's so many concerns in this environment. They look cheap. I think cheap stocks get cheaper. So I think, you're going to get a nice lift here this morning. You're getting a nice lift, nice day trade. Could Bank of America bounce to 28? Absolutely. There's room to the upside, but if it was to get up there, I think it's a nice short. So I'm afraid, I think you're a little early if you're jumping in right off the hop because they've really been beat up. I mean, Bank of America is down 15% in less than 15 days from the highs. So they're due for a bounce. That bounce, I believe, is to be sold.
All right, that'll be it for today's show. I want to thank our guest, Anne-Marie Baiynd. Thanks to all of you in our chat, both on YouTube and premarket.benzinga.com. Catch our podcast wherever you get your podcasts, or we watch our show on youtube.com/Benzinga TV. Please remember, all the information from our show is meant to be used as informational purposes only and not for investing or trading advice. Any questions, comments, concerns, email us, premarket@benzinga.com. We do see that email and respond when people email us, or just say hi if you'd like. That works too. That'll be it for us today. We'll be back with you tomorrow. In the meantime, everyone have a good rest of your day and good luck out there.